The dollar debasement trade is in full flow. We're seeing gold and silver push to new all-time highs. We're seeing the S&P hit new all-time highs. Stocks are on fire. Commodities are on fire. Crypto is still lagging behind. So I'm going to ask the question, what next? I feel like I've been saying on every video I've made, the stock market is about to break to new all-time highs in Q1. I feel like we're about to go there on the Nasdaq. We pierced them on the S&P. I'm also looking at crypto, and am I still bearish? Do I think crypto has a chance to actually turn around and follow the stock market higher? I'll break it all down in this video. If you don't know who I am, my name is Simon. I've been a trader since 2008, so for 18 years. And I make these videos to help you navigate the financial markets during times of uncertainty. If you do like this content, please do hit the like, hit subscribe. None of this is financial advice, and let's jump in. So we're going to kick things off with the US dollar, probably the most important chart there is out there. As you can see on the weekly time frame, the US dollar breaking through key support. These trend lines have been in play for a very long time. We'll have to go back to the monthly. So a trend line coming from 2011 here. And as you can see, we are starting to break down. So if we just sort of zoom out on the US dollar long term, you can see that historically the dollar has traded down, or the DXY has traded down to that 80 level on multiple occasions in the past, usually using that area as support. And I'm really asking the question myself here. Obviously, there will be bounces along the way, but how low does this go? We haven't seen those low levels really since over 10 years ago, sort of 12 years ago. More recently, we've been finding support around the 90 level or the high 80s. So do we go down there, or do we actually follow this path and actually have a fake out and go higher? I'm not too sure at the moment. I'm going to take that one off. But I think there's a couple of paths that we could see on the dollar. Obviously, it looks like we are losing this level. Initially, we should come down into the 94s. Maybe we bounce around there, get some sort of retracement higher before going lower. I'm not too sure at the moment what the path is going to be. Obviously, this is on a monthly scale. So really, I don't know what's going to happen after this year, but for 2026, if I'm trying to put a price path, potentially we go lower into February, maybe sort of March, April, we see the back test, we see a correction in the stock market. I've talked about Q2 potentially being when I could envisage a pullback in stocks. And then over the remainder of the year, this would be very bullish, by the way, for risk assets. We could make our way down to lower levels and potentially bottoming in the dollar at the end of the year before seeing a recovery and potentially going higher in 2027. I'm not too sure at the moment. It remains to be seen what the longer term outlook's going to be, but I think a path like this might make some sense, and it could be that over the next 2 to 3 years we actually see the dollar normalize between, say, the high 80s and around the 100 level. I think that could be on the cards. So what I'm trying to say is potentially we are seeing prices within this range sort of going forward, and eventually dollar maybe climbing back up sort of later on in the decade. But I'm thinking something like this could play out for the dollar. But for now, we just really have to treat it as it is. It is a weakening dollar, and that is obviously good for assets priced in the dollar, such as the stock market, such as commodities. Obviously, we have to touch on gold and silver. Let me just clear these Fibonacci retracements. You can see we've pretty much hit the full extension on the Fibonacci retracement here. This is on a monthly chart. If we go down to a weekly chart, we can see gold is just absolutely flying here. Just every consolidation seems to be breaking to the upside, and Honestly, I don't really have any longer term targets for where this market's going to go. I just know you can't fight these types of trends. These are very, very, very strong, powerful trends. If we turn on the Tom DeMark sequential indicator, that can often give us an idea of where the trend is potentially getting exhausted. And look, we've seen this in the past. This is on the weekly scale, and you can see how these nine tops have proven decent areas where we've seen pullbacks. But the latest nine top, we did something completely different. We shot straight above it. And what this really tells me is that these markets are just squeezing any shorts. So I know a lot of people are talking about potentially shorting these markets and wanting to pick tops in the metals bull run, but I really don't think you can. I think metals could go a lot higher. Even from these prices, they still have room to run. But the one thing I do know for sure is that if we don't get a pullback soon, this rally is going to become increasingly unsustainable, and the top could be in sooner than maybe a lot of people were thinking. If people are thinking that this bull run is just getting started in metals, I think they'll be in for a bit of a rude awakening at some point this year. So personally, I'm not fighting the trend. I'll be looking for signs of reversal, but I think you just have to let these markets run higher. It's the same with silver. You just have to let this run higher. Obviously, this Tom DeMark weekly nine did absolutely nothing. The last one, the last two, the last three, the last four all worked really well. But this one, it just got completely blasted through, and anybody trying to trade this on the short side got completely rinsed. So, yes, be very, very careful with gold and silver. They're very volatile right now. And, you know, if you're long this, congratulations to you. But for me, shorts can't really be thought about right now until we see some further signs of weakness in the chart. And you see the RSI here. It's just printing just higher and higher. These are really, really strong parabolic moves. Oil is starting to join the party. So I talked about taking a long trade on oil when this green 2 got above this green 1, which also confirmed this trend line breakout. I'm happy in my oil long right now. I don't see any reason to close that. If you're looking for targets on this, I think the first main target is going to be this 66.7, which is going to be this zero point 0.5 retracement. It's also historically a support and resistance line here. You can see how all of these lows have been coming in at support. So that's around about 67. But if we actually catch some of these lows, you can see here we've got quite a key zone on the chart that we're coming into backtest. And obviously this is where we rejected from as we move down to the most recent lows. So for me personally, I'm looking to trade oil. I do think oil will make its way through this zone and likely come up and make a full retrace race into the 70s. So oil is a trade I'm still in for now, but like I say, I'll be looking at potentially taking some off in the 66 to 67 range. The 10-year yield as well, it's still underneath this trend line. So obviously if this does break, that might cause a problem. That could be one thing that does result in the correction of the markets, is a spike in bond yields, which obviously means when yields go higher, it means demand for bonds is less. So they have to be incentivized by higher yields to make bond investing more attractive. But obviously, as the yields go higher, the prices of bonds go lower. So there's an inverse correlation. Obviously, if we did see this breakout, it would cause some turmoil in the bond market, which could have ripple effects to the stock market. So keeping an eye on this chart really closely. Another chart we should look at is the VIX as well. So this is the volatility index on the S&P. This is a pretty good gauge of the sentiment in the market when it comes to risk, and when it comes to fear and people's concerns. Obviously, when volatility goes high, it means that people are more worried, that they're becoming a little bit nervous, and they're starting to usually sell their positions, their risk on positions. So obviously a low VIX reading correlates to a risk on environment, and we're still seeing a low VIX reading. Anything under 19, I like to use as an area to invest in stocks. So if as long as we're below 19, then it's usually plain sailing for the markets, and that is what we're seeing right now. So Jumping into the stock market, we can see this week the S&P has made new all-time highs, and we are starting to follow the path. At one point, it looked like we might not be. Let me take off the TD sequential, but we are following the path higher. So this is really what I'm expecting. I'm expecting us to push higher, maybe a bit of a pullback, push on into Q2 and then Q2 to see that correction. Could this correction go a bit deeper and could it be a bit more like this or something like this? Absolutely, it could be. We just need to pay attention to everything going on, especially when it comes to the US dollar, especially when it comes to the bond yields, looking at the VIX as well, making sure we don't get some sort of extended up move in that. So there's a lot of moving parts. Obviously, I'm here to try and piece everything together and break it down for you. But for now, I remain long stocks. I think there's no reason to get out of stocks. If we do turn on the TD sequential, then we can actually look at the current TD count, which is a green one. So potentially, this could indicate that if we get a green two next week going above the green one, that could be potentially another 7, 8 weeks of upside before getting a major sort of pullback. Or when I say a major pullback, something like a sort of 5 to 10% pullback. I mean, this pullback I've put on here is more of a 15% pullback. I don't know if we're going to get that much of a pullback, but it's just to give you an idea of what might happen if we get that flight to safety and that risk off starting to come in Q2, as I think we might. But for now, there's still upside to be had here. I mean, even going up to my targets of around about sort of 7,300, you've still got about another 4 to 5%. This could be some nice gains in those stocks. Obviously, the Nasdaq as well is a big one. So the Nasdaq, similar. We saw the TD9 sell. That resulted in this consolidation. We're now getting the green one, looking for a green two next week above this green one to really result in an expansion to the upside and off to new all-time highs for the Nasdaq, which I personally think does happen. So I am bullish on stocks still. No, I'm not yet holding any of my stock positions, but I will be once we start to get extended. When this market has moved up another sort of 4 or 5%, then that will be the time that I'm starting to layer out of some of my stock positions in anticipation of a bigger correction. And by the way, I'm not seeing this next pullback as the big one. I do think this next pullback in the stock market will be a buy because all of the economic data is saying that the economy is strong. We're not seeing employment spike. We're seeing inflation under control. There's not really any reasons to get too bearish on the stock market right now beyond a 10 to 10%, maybe, a 5 to 10%, maybe even a 15% correction. That would be completely normal, especially if we do really push on here another sort of 5 to 10% in the indices, then yeah, we might see a bigger pullback. So let's now jump into Bitcoin. And Bitcoin is another asset that is really following the path fairly well. We've been calling this market fairly well since the top around, well, when we were above 120,000. I've been expecting lower prices. And I still think we're going to get acceleration to the downside. Now, the real question is when we come down and sweep this low, do we get a sweep of this low and then a bounce and then roll over? I think that might depend on what the stock market's doing. It's very hard to see Bitcoin crashing all the way down sub 70K with the stock market breaking to new all-time highs. And the thing that I've been struggling with myself recently, especially on the last video I said I was in some crypto short positions, is actually holding those positions when you've got the stock market just absolutely ripping to the upside, when you've got the dollar getting destroyed, when you've got gold making new obviously all-time highs, but just a generational melt up in not just risk assets, but all hard assets. And then you've got Bitcoin, which is one of the hardest assets ever known to man, which is really, really struggling. So it's a little bit tricky right now to have conviction as a bear, but I am remaining with my conviction to the downside. Maybe we don't come down so quickly, especially if Bitcoin and gold are remaining to push higher. Maybe at some point we start to see some rotation from metals. So let's say, for example, Bitcoin does come down. Let's say, for example, this coincides, the drop down to 80,000 coincides with gold and silver starting to top out and going on a correction. Maybe we see Bitcoin get a bit of a pump at that stage. And then, of course, you're going to get people coming out and saying, that's it, gold, silver have topped. Bitcoin and Ethereum is the rotation. It's going from physical to digital. This is the future. We're about to go to 200,000, 300,000 in Bitcoin. And maybe that is the final trap that gets people the wrong side of this market. And then we go down into maybe a final move lower, maybe the low for Bitcoin for this bear market does come in the 60,000 range. Maybe it goes down lower. If we throw on the moving averages, we can see I'm still targeting this 200-week moving average as a really good target on the downside. So I do think that will be a key level when we start coming sort of below 60,000. I do think there will be some big support coming in here. Do we actually see things go lower than that? There's definitely an argument for it. I mean, if we just look at previous bear markets, probably looking at the last one is a pretty good example. Remember, we still had some very strong narratives around here. We still had MicroStrategy buying and the institutions buying, but Bitcoin still went down over 77%. And if we look at the current all-time high, and if we were to come down, and obviously we could assume maybe we won't go down 77%, but maybe we will see some diminishing returns on the downside. Maybe we just come down 73 or 74%. That still gets you into the 30 to 40K range. So what I'm trying to say is we could go a bit lower than people think, especially if the stock market is still pushing to new all-time highs and Bitcoin is down in the 60K range. My chain of thought is that when the market goes completely risk off and we see that flight to safety, this might coincide with the dollar starting to recover. That is when the stock market will really take a big tumble. And it's hard to see crypto outperforming and have bottomed out before the stock market actually corrects severely. So what I'm thinking is, okay, we might see this in, say, for example, Q2, when stocks got a bit of a pullback, stock market recovers and pushes to new all-time highs, Bitcoin gets a decent bounce, people start saying that's it's the low, and then we see something like this as the stock market crashes and we come down to that 30K range, and that is the final move lower. So that's something we need to be aware of. Looking at Ethereum then, Ethereum looking very heavy here, and I do think Ethereum still breaks down. So there's no real change in the outlook on ETH. Just weak, just unable to recapture any key support levels. Failing at both of these MAs. Looks like it wants to roll over closer to this long-term trend line here, around about 2,200. Wouldn't be surprised if we get there in the first half of this year. The same with Solana. I think Solana is probably coming down to around about $100 over the next couple of months. And another position I'm in on the short side is XRP. And look, I know XRP is a fun favorite, but you just have to zoom out a little. And let me clean this up slightly. Just have to see where XRP's come from. I think at some point before this bear market is over, we're coming back to around the $50 to $60 range, probably back down into this long-term trend line. And I think there'll be bounces along the way. Maybe we come down around about sort of 1.4, 1.3, and we get a bit of a bounce from there. Maybe we hit this 200-week moving average and we get a bit of a bounce from there. So maybe it looks like something like this for XRP, and people start to say that's it, the low's in, we fake above $2, and then we go for that final drop. I think something like that is on the cards. And to be honest, I'm expecting the rest of the crypto market to probably behave in a similar manner. So I'm going to leave it there. Obviously, thank you very much for watching. If you have enjoyed this stream, please do not forget to hit like and subscribe for more updates. I'm trying to do, or should I say, shift to a twice weekly update now. So a Monday update and then a Wednesday, Thursday update. I'm going to be coming up with a separate video about the stock market later on. So I want to talk about some of the stock picks, some of our picks, things like Meta, things like Tesla, absolutely flying at the moment. Great to see. Obviously, Meta had really, really strong earnings yesterday. We're also seeing oil start to move, and some of my energy related stock picks, such as Oxy, doing well. Things like Oklo starting to pick up. The data center stocks, things like CoreWeave, things like IRN, really, really starting to pick up as well. So we're having a great run on the stock front. I'll do a separate video to cover the stocks, but wanted to get this out there about Bitcoin, about the commodities, about the dollar. So hopefully that's been of use, and I will talk to you all on the next one.